Welcome back, everybody. Sive Morten is here with ForexPeaceArmy.com. Let's take a look again at the gold market. As usual, we prepared a report today, so I put the link down below in the video description. It's not a lot of factors actually were in game on this week, mostly some statistics. So we have to take a look at some additional information, some trends that exist right now in global finances to understand what's going on and actually what's the long-term picture, whether we need to adjust it or maybe it makes sense to do something in a shorter-term view. So all the stuff I have expressed in our report. So for instance, we have identified a very interesting trend, so that the United Kingdom gradually is replacing Japan and China in the holding of United States treasuries, while China and Japan gradually is accumulating the gold, which is actually a very interesting trend, especially if you recall that United Kingdom situation, as you know, is far from the actually perfect. So they have really big difficulties in the economy, and these additional investments in United States treasuries, it's really something to think about. Also have taken a look at some specific gold market indicators, volatility, speculative positions, some other interesting stuff. So, which led us to just update the long-term view and the mid-term perspective. In the mid-term perspective, guys, we still think that chances of the possible retracement is growing. So I wouldn't say that it definitely is granted, but there really a few things could play a role here. So, for example, we're coming to the end of the financial year with all these annual bonuses payments. So some profit taking might be, especially we are rolling into the Christmas gradually. The driving factors that now exist are at a high degree already are priced in. So, and gold needs some new challenges to show the stronger performance. Technical markets also never bad and has reached a very important target in 37.45 area that we already talked about. So all this together, if not the promising retracement, but at least makes us to be cautious on the possible bearish signs and makes us to keep an eye on the possible bearish patterns around the 38 area where we stand right now. In fact, this big butterfly that you can see on the daily chart is already thing to think about, right? So it's potentially a bearish reversal pattern. And once markets stop flooring around the top, it will be interesting how the story will be over. Meantime, in the beginning of the week, we're still dealing with this bullish grabber that we discussed, and we still think that market, before the big retracement might start, should flirt around the top a bit. We're not counting on the possible straightforward breakout in higher levels of the gold, by all those reasons that I have just explained. But challenging on the top and flirting around and grabbing stops are still possible. After this will happen, we suggest that chances on the possible deep retracement are really significant. In fact, everything could start right from here. So you can see it might be kind of the hand shoulders pattern here, so easily, right? So I don't see some really why it can't happen actually. Besides here, as you can see, there's also minor divergences growing, but all this stuff is not sufficient yet for taking the short position. Actually, in the current circumstances, we still consider taking the long position, just to finalize this overall performance. On the fall time frame chart, the breakout that we discussed on Thursday and Friday actually happened, and based on current performance, so you can see right on Friday we've got great bearish engulfing pattern. I would suggest that the butterfly is most probable shape here, because daily pattern is still valid. Its invalidation stands from the 37.20 area approximately in these lows. Until market stands above these lows, grabber valid, and actually short-term bullish context will be valid. But at the same time, the engulfing pattern could trigger deeper action on intraday charts, which is perfectly fits to the shape of the butterfly, right? So market could start forming the bottom on the right arm, right wing. The second issue that you need to keep an eye on, especially if you're planning to take the long position here, is a probable bullish grabbers on the 4 time frame chart. Once it will be formed, especially around some support areas that we will show you on the hourly chart, that might be great assistance to decision making on a position taken. So that's what about the 4 time frame chart. On 30-minute chart or hourly chart, you could use the hourly chart. Here is also a few things to talk about. On the upward breakout, market completed this local inner standing butterfly pattern, now turns to retracement. This actually creates an engulfing, and very often engulfing takes the ABCD shape on the intraday chart. So something like this might be formed. I'm not sure this definitely will be, because currently, as you can see, it's difficult to say. Market actually shows no reaction yet, just downside action. But very often it takes the shape of the ABCD. And from that standpoint of view, I would keep an eye on these two levels. First one is confluence 37.53, 37.58. And next one, 37.43. Although theoretically market could drop even lower, and as I said, until market above the 37.20, all bullish patterns will be valid. But it happens rare when the market stands bullish. Most probable, market stops at some well-known support areas. Its confluence, 618 support should be enough if market remains bullish. Another reason why I think to watch on these levels is probable some kind of the hand-shoulder shape you can see here. It might be shoulder, head, compounding head, some kind of the, and another shoulder. And it should be more or less harmonic to this one, which is actually fits perfectly to the confluence area. That's why I think that these two levels have to become primary ones to keep an eye on. So as usual, what the strategy you could apply here on position taking? Most actually welcome and best strategy is, I suppose, it will be just watching for the shape, controlling the appearing of the grabber on the full time frame chart. If you will get it and market will be around one of these levels, that will be a good signal for possible position taking. Additionally, you have to drop your time frames to 5-minute chart, 15-minute chart, and watch for market reaction to the predefined levels. Once you could see the bullish pattern, reversal patterns, whatever it will be, you could try to take it. But it's a bit more advanced approach, so not everybody is familiar with this and have skills to do this. If you just would like to take the long position, but you're not sure that you will be able to find these patterns or just control the situation, most easy way is to split position in parts. So split it in 3-4 parts and take it gradually. Market hits confluence. Just keep an eye on it, starting some reaction, floating around, doesn't break it immediately to the downside. Take 20% you will add. Drop more to the 37.43, add another 20-25%. And then see what will happen. Something like this. So that's two ways how we could do it. If by some reason, we do not know, but actually anything could happen, the market will start dropping lower, taking out these lows, it means that this bullish context and all the bullish patterns that we have here on the hourly chart and even daily grabber will be erased, and that significantly will increase chances for immediate deep downside retracement. So larger scale retracement could start. So until market flirts around these supports and stands above this area, it keeps chances on a possible upward continuation and complete the trading plan that we actually now are discussing. So that's probably all for now. Let's see how it turns.